Hi, good evening to everyone. And I'm very excited to have you all here. Welcome once again. And sorry for the slight delays. We had a little bit of a technical challenge, but we will just start right away. So, today we're going to learn about financial markets and then how to invest in financial markets. So, joining me today, we have Prince Dagadu, who is a fixed income trader at Data Bank Alikem Abusu, who works with the wealth management division of Data Bank. We also have Eben Gani, who is leading operations as Yellow Card in Ghana, and Frederick Aqua, a business advisor specialized in Forex markets. So, right before we delve into the conversation, I would allow my panelists to introduce themselves. So, let's start with Elikim here. So, Elikim, I would like you to introduce yourself so that the audience can know more about you and what you do. Thank you.
Wonderful. Thank you. Hi, I'm Elikem. I'm a fund manager with Data Bank's Wealth Management Unit, and I've been managing funds for high net worth individuals for 4 years. I've been in the industry for 6 years, but specifically on fund management for 4 years. And I've had a lot of experiences working with clients individually to manage their own portfolios. So I look forward to sharing some of the insights that I've gathered over time. Thank you.
Thank you, Elikim, for the brief introduction. We'll move to Prince now. So, Prince, can you share with us what you do and who you are?
All right, thanks, Edward. My name is Prince. I work as a fixed income trader with Data Bank. And so, what basically I do is to trade in bonds on the market. It's something I've been doing for about 4 years. And I'm always happy to share knowledge and insights about investments. And this is another great opportunity to do that. I'm happy to be here.
Okay, thank you, Prince. So, let's hear from Eben Gani of Yellow Card.
Yeah, hi, hello. So I'm Eben, run operations for Yellow Card in Ghana. Yellow Card is basically a cryptocurrency exchange. We operate across Africa. We are currently about 9 countries across Africa and expanding to more countries as of now. Yeah, nice to be here.
Interesting. Thank you, Eben, for that introduction. And then finally, we'd hear from Frederick.
Hi, good evening to everyone. My name is Frederick Aqua. Professionally, I work with the SNB as business development advisor, but I also trade. I'm a retail Forex trader, and I'm happy to share insight with you guys.
Thank you, Frederick, for that introduction as well. So, before we proceed to understand what financial markets are, you can see from the chats that we've shared some links with you. So basically, these links are links to our social media platforms as well as the African Observations app, which is to help you make better and informed financial decisions. And so, if you're joining today's webinar, what you should know is that it's proudly sponsored by African Observations. The app allows you to make better and informed financial decisions by way of giving you access to financial information. So you can check out the app on the Play Store and then also on the App Store, and then you can also follow us on social media. So we'll start right away with Elikem. As you may already know, we are looking at financial markets. So Elikem is going to be talking about the stock market as well as the money market. So Elikem, can you throw some light on what the stock market really is?
Sure, I'd love to. So, the stock market is a place where we buy and sell shares in companies. You can imagine it as any other company, any other market, but this time instead of going to buy your usual food stuff and physical goods, this time you buy and sell ownership of companies. So when you buy a share in a company, you are a shareholder, you own a part of it, and you stand to benefit when the company makes profit. And when they make profits, they may declare dividends, which you would get some if they do. And you also stand to gain when there's a gain in the value. So as the stocks are traded on the market, the prices go up and down. So if you buy a stock and the price goes up, then you also stand to benefit from that. And also it comes with the risk of loss if the business doesn't go well. The last thing I would say about this unique market is, why does it exist in the first place? It exists because companies need money to fund their businesses. So companies come to the stock market to raise funds to conduct their business. And sometimes on occasion, what happens is there are certain investors in private companies who may want to sell their shares so that they can cash out maybe the entire amount or just a portion. So then you hear about things like an IPO. So MTN did an IPO in 2018. So they listed their shares on the stock exchange, and people were able to buy their shares. Some of the proceeds were used to pay an investor who was exiting a small portion of their investment. So that gives you a practical sense of what a stock market is.
Thank you, Elikim, for that brief explanation of what a stock market is. So basically, I'm just understanding that if you want to invest in a company, if you want to own a part of a company, then it means that you should go in for stocks. Yeah. So the stocks is the option for the person that wants to invest in a company, or the person that wants to be a part owner of a company. So Elikim, how different is the stock market from the money market? A lot of people don't really understand what the money market is. So can you let us understand what the money market is and how different is that from the stock market? Yeah.
Okay, so I think the money market is the more popular one. Funny thing about it is a lot of us are in the money market, but we don't know it's called the money market. So I'll tell you. I'll first start with what the money market is. Money market is where you invest, and your intention for that investment is for 1 year or less. This calls to mind investments like treasury bills that run for 91 days, that's 3 months. 182 days, that's 6 months. You have bank fixed deposits that run for a shorter term. There are bank term deposits if they are for if they are 1 year or less. And then you also have the money market mutual funds, data banks, M fund, EDC's fixed income fund. All right. So those are the type of investments that we classify under money market. With this one, a unique difference between the stock market and the money market is that with the money market, when you invest a principal, and you expect that you should get your principal back plus interest. There's an agreement you make with whoever you are giving the money to. So if it's a treasury bill, you are giving the money to the government, you are lending to the government. If it's a bank fixed deposit, you are giving the money to the bank. So there's that agreement that you make with the bank or the institution that they must pay your money back with interest on a set date. You can roll over your investment if you want, but there's that option. But with the stock market, there's no guarantees. You may get all your money back and it may double or triple in a short time, or you may lose all your money. There are no guarantees in there. And typically, with the stock markets, people invest for a long term. With the money market, the idea is you're investing in investments that would run for less than 1 year. Of course, you can keep rolling it over, but the intention of each time you invest is less than 1 year. So the money market is less risky because there's a certain level of certainty. You can expect what you've agreed on to happen. Of course, it may go wrong, like the institution may go down, but at least there's more certainty than with the stock market. And with the stock market, prices are volatile. You see a price go up and it comes down. MTN, for example, listed at 75 pesos per share. Sometime last year, it went to as low as 55 pesos per share. This year, it's gone as high as 1 CD, 26 pesos per share. So you see, in a short time span, things can go up and down. So those are some of the differences between the stock market and the money market.
Interesting. I like how you have outlined the differences. So if you want to go short term, then it means that the money market is the one for you, and then if you want to go long term, the stock market is the one for you. And the stock market is for those that want to own a part of a company, while the money market is for those that want to borrow. Lend to the government, and then also make some returns in the shortest possible time. Thank you, Elikim, for that explanation. So I think we would now switch slightly to understand the other financial markets. So I would want Prince to talk about the bond market. Many times people hear about bonds, the government is issuing a bond, and then you really don't understand what it is, or how can you even invest in a bond as an individual to make some kind of return. So Prince, can you tell us about the bond market?
All right. Thanks for that. And thanks, Elikem, for your presentation, because I'm going to be building on some of the things you said. So Elikem talked about the money market, where you have securities like treasury bills, which in effect are short-term debts, right? So let's think of bonds as the elder cousin of the bills, because in the case of bonds, bonds are also debt instruments, but in the case of bonds, they are held for, or they have a tenor longer than 1 year. So in Ghana, for instance, you can talk about the 2 year notes, 3 year notes, there's the 5 year, 6, 7, 10 year, there's a 15 year, there's a 20 year. And if you follow the financial news, you might have heard them toy with the idea of a century bond, which is a 100-year bond. So bonds generally are longer term financial instruments, which is something that you should know. Now we've talked about governments. A lot of people know more about government bonds, but one thing you should know is that bonds are not only issued by government. So there are the treasury bonds, which are bonds issued by government, and then there are the corporate bonds, which are bonds issued by corporate institutions. So in Ghana, you can talk about companies such as Bayport Savings and Loans, Easway Savings and Loans, among others, who have issued corporate notes. In the case of corporate notes, this is being issued by corporate institutions, and in the case of treasury notes or treasury bonds, we are talking about bonds issued by the government. Now, a bond issued by the government is not the same as a bond issued by a corporate institution, right? A bond issued by the government typically would be a lower risk bond. Now we know government has the taxing ability. They're able to tax and raise revenue from other sources. All the levies that you might see, the taxes you might see on your pay slip at the end of the month, all of these go to the government. And government, because they are receiving from these multiple sources, are deemed to be in a better position to repay some of these bonds. So we would say government bonds are relatively low risk compared to corporate bonds. Notice that the corporate institution might only has so many number of revenue lines where they are able to make money, and they can only pay you from what they've earned from whatever business it is that they are into. So what you would notice is that government bonds tend to pay a lower return or a lower interest rate compared to corporate bonds. And it makes sense, because if there's a lot more confidence that government will be able to pay back your bonds, then the risk is lower. So the compensation, what they pay you for taking the risk with them, is lower compared with the corporate counterparts. Now, in terms of how bonds give you return, so Elikem talked about dividends and capital gain for stocks, which is how you benefit from stock. In the case of bonds, bonds would pay you what is known as coupon, or in regular investment parlance, you can call it interest. So it pays you periodic interest over the life of the bond you are holding. Now, there are different structures for bonds, but I'll focus on one that is more common, one that people are more familiar with. So for most bonds in Ghana, they pay their coupon or the interest every 6 months, right? So in the case of a 5 year bond, a 5 year bond will pay coupon or interest 10 times, because every 6 months, which is every half year, it's paying coupon on your investment, which is another interesting thing that you should know. But there are different other structures for bonds that exist out there. Now, I don't know whether you'd want me to go further or you'd want to go around and come back for further insights on bonds.
I think we'll go around and come back for further insights, but
Right.
you've done justice to what the bond market is.
Okay.
I'm very much, how do you call it, interested in the bond market because many times people feel like it's a very risky market. But in recent times, I've come to understand that the bond market is actually a rewarding market. And sometimes it's actually a better market than the stock market because the stock market in Ghana is not so popular, it's not so liquid. But with the bond market, there's some kind of certainty in terms of the returns that you get. If the government is issuing a bond and you purchase a bond, you know that come what may, you're going to get your returns, your coupon at the end of if it's the year or if it's on a quarterly basis, whatever period that has been agreed on, you're definitely going to get your money. But with the stock market, you may never know. The stock price of the company can go down, and then you have lost your investment. I remember some time back, actually in the university, I bought my first shares. I bought shares in Royal EcoBank and then Stan Bank. And then after so many years, I decided to just check the prices of the stock, and I realized that it's only gold that has actually increased. And I felt like I wasted my time and my money because after investing for over 5 years in the stock market, it went bad. So maybe I should have also done my research to understand what the stock market really is. But over time, I've understood that there is another market that is called the bond market, which can be rewarding for investors. So if you are listening today on the webinar, you can also explore that market. That's the bond market. Prince will share more insights as we go on. So we've learned about the bond market, the stock market, and then the money market. Now I want us to look at the more complex market or the more volatile markets. In recent times, we've been hearing about the cryptocurrencies and then Forex, people trading Forex here and there, and then people investing in Bitcoin and all of that. So we have Eben from Yellow Card. He's working directly in the markets, in the cryptocurrency market. So Eben would share with us what the crypto market is all about. For the people that don't really understand what Bitcoin is or how to invest in Bitcoin, Eben is here to share with us some insights. So Eben, what is the cryptocurrency market? People are saying crypto, Bitcoin, Ethereum. All of these crypto conversations that are happening. What's your take on it? Yeah.
Okay. So cryptocurrency, as the name says, it's a currency, but it's not like the normal currency. So in the normal currency is what we call fiat currency. So the normal CD or dollars we spend is what we call fiat money. And we have cryptocurrency, which is like internet money or digital money that is built on a protocol called blockchain or a ledger called blockchain. So the normal currency, which is CDs, let me explain that. CDs is being issued by the Bank of Ghana in Ghana. So if you want CDs, it's the Bank of Ghana that issues the CDs. The Bank of Ghana keeps track of the number of CDs in existence. So if you go to Bank of Ghana, they should be able to tell you that they've printed X amount of CDs currently in existence. But for cryptocurrency, the blockchain plays the role of the Bank of Ghana. So the blockchain keeps the ledger to show that, okay, there's X amount of currency of this crypto in existence. So cryptocurrency is like the broad term for all the currencies, as we have like fiat compasses of several currencies like the CD dollar. But if you go under the cryptocurrency umbrella, that's where we have coins like Bitcoin, Ethereum, Tether, and several others. There are thousands of them. So for this conversation, I'll just stick to Bitcoin, which is the most popular one and the first cryptocurrency in the sense. So I'll just stick to it. So Bitcoin circulation is being known. So we know that the circulation of Bitcoin is 21 million. The same way BOG or Bank of Ghana can tell you the number of CDs in existence now, the Bitcoin ledger or the Bitcoin blockchain tells us that there's 21 million in it, to be ever be printed. Sorry, there is a maximum to be ever be printed, but currently the current supply is around 18 million. So the same way the Bank of Ghana can tell you the current money they've printed, maybe next year they might print more and they'll issue statements to say that they've printed X amount of CDs in existence. So the differentiating factor is that Bitcoin or cryptocurrencies are controlled by blockchain technology, which is decentralized. So there's no central party or one government or one person controlling the issuance and controlling how it's being recorded and everything. It's decentralized, and people all around the world can verify and see how much is in circulation.
Thank you, Eben, for that explanation. I have not really invested in crypto before, but I mean, you are birthing an interest in me, so I think I'll look into that as well. So for those of us that are quite new to the crypto markets, I think we've learned something this evening. So the crypto is not like the other market where people have control of the market. For example, when you speak of the central banks of countries, they determine the demand and supply of what happens in the market, especially when it comes to cash or the money market. But when it comes to the crypto market, it's all about the blockchain technology. So it's not really in someone's hands to determine what the value is, and it's across the whole world. So
Yeah.
in a certain sense, you are sort of like investing in something that is not lying in the control of one person. It can't easily be influenced. But I think it's quite volatile. I don't know what your thoughts are. So maybe when we get to the next round of questions, you can throw some light on that as well. So we'll hear from Frederick now about the Forex market. A lot of people want to invest in currencies or they want to trade in currencies, and people are learning about Forex and learning so much in the area, but they start and they realize that it's not so easy, or they invest some money and then they lose everything that they have invested. So, Ferry, can you throw some light on what the Forex market is and how people can take advantage of the opportunities in the Forex market?
Yes, thank you, Edward. Um, First off, I would like to say that actually the Forex market is not, profiting from the Forex market is not difficult. And maybe later on we can dissect more into that conversation. But actually, Forex has come to being because of the need for trade. You know, different countries produce different products, and we here in Ghana would need some sneakers from Nike in the US or in the UK. And so normally uh, countries exchange, goods and services. And for you to be able to exchange goods and services, you need to, change your country currency into that particular country's currency so that you can actually buy those goods and then services. However, Forex has become a mainstream kind of business for so many retail traders, and it's just because, for example, people are betting to say that okay, maybe because the economy of, let's say, China is growing quickly, it means that the demand for the Chinese yuan will be higher, and so the higher the demand, the value of that yuan also goes up, and so that is how forex actually is like. And so people who are trading forex actually are actually speculating on which currency is going to be stronger against the other in the market. So basically, that is a short explanatory of what the forex market is like. And then I would like to say that actually, the influx of actually forex traders have become very high. I remember somewhere in 2013 when I started, exploring that market, there was about, 3 trillion US dollars of trade, in the forex market. But currently we have about 6 trillion, which is more than a double of that within that short span of years. And so Forex actually getting a lot of traction, also because I think because of how we have, demonstrated it on social media, people having flashy cars and nice houses and so on and so forth, portraying that actually forex is something that you can, do and then get rich quick and that kind of thing. And so that is why there are a lot of people coming into forex trading. But actually, those who are like single individuals like me, and then those who will be interested, we account for just a small chunk of trades that goes on. That's, I mean, retail forex traders. We account for just about 5% of the entire transactions that goes on. And I think I got some statistics that just about 10 million globally. We just have about 10 million active forex traders, and that 10 million is just about 6 to 5% of the transactions that goes on. So actually, it's just the big banks like the Goldmans and then the JP Morgans and those guys that actually do all those transactions, and actually they never lose anyway. That's one thing that all retail traders should know. Those banks never lose. If you really check on their annual performances, they never lose. And so if you're coming in as a retail forex trader, you should have that at the back of your mind, and also see how you play with the big boys. If you try to go against them, you always lose. And I think that is what I want to make as a point when we get there, that forex trading is actually easy. It's easy if you know actually what you are doing. Yeah.
Thank you, Frederick, for that insights share. Um, Forex trading is actually easy if you know what you're doing. I think I agree with you. If you know what you're really doing, then it should be easy for you to maneuver your way around the market. And I find it very interesting when you see that the the trading volume, I mean, over the past few years has more than doubled from $3 trillion to over $6 trillion. And then when you look at the the number of people that are actually active forex traders, the fraction as compared to the total volume of trade is very, very low. So it does mean that there is an opportunity in forex. But then again, you should know what you're doing before you invest in forex. And there are two types of investors: the retail investor and then the institutional investor. So for someone like me or any other person who is joining on the call, you are like a retail investor because you want to do like the day trading, the normal trading. And then for the institutional investors, they put so much money, they invest huge sums of money in it. And like Frederick said, they don't lose out. So if you're investing in Forex, you should really understand what you're doing, because there are people that are putting so much money and then they are not losing out. Thank you, Prince, Aben, Elekem, and Frederick for the first round of questions. And I think that those that are on the call are picking some insights for their decisions, especially in terms of what or where they would want to invest their money. Before we move to the next round of questions, I would just want to remind all our audience that you can follow us on social media, African Observations. The link is being shared on the chat. So you can follow us on social media, on Facebook, LinkedIn, social media, other social media channels like YouTube, Instagram. We have very active accounts there where you can get to see basically everything that we are doing. And African Observations is just a mobile app that is helping people make better and informed financial decisions. So on the app, you can get to have access to different financial information. You can also get financial education and then help with financial advice. So there's a feature on the app that gives you all of this information, that is the market's data. So having the app would really help you to get the information you need to make better informed financial decisions. So you can just click the link to get all of that information. Thank you once again for joining. Now we'll move to our next round of questions, starting with Elikim. So Elikim, if someone wants to invest in stocks, what's the typical procedure? How can someone like me invest in stocks? Yeah.
Okay, so if you want to invest in stocks, the best thing to do would be to go to a brokerage firm where we have examples as Databank Brokerage Limited, we have IC Securities, Apacan Securities, Black Star Brokerage, GFX Brokers. These are institutions that have the license to trade on the stock market on behalf of their investors. So you have them take your order and trade the securities for you. Added benefits you have is an account will be created with them and also with their central securities depository, so that and you have another institution keeping track of your ownership, so that in case of any issues, any concerns you may have with one particular institution, you can always move your account easily to another institution. But before that, Edward, if I may, I think there's a step to take before you decide whether how to go and buy invest in the stock market, if I may, on who exactly this is for.
Okay, please go ahead and share with us
All right.
what you want to say.
So a key thing about the stock market is that it comes with a lot of risk. So you need to be willing and able to take on the risk. When I say willingness, I mean over the long term, we've observed that stocks would do better than money markets and the bond markets, because they offer a higher potential for risk for in return. The thing though is you need to stick in there for the long term, because you can't really predict. There will be ups and downs, but over the long term, what we have observed, we can't predict the future, but this is what we've observed. Knowing that, if you come into the stock market, you should be ready to see your the value of your investments go up and down. So if you invest 1,000 cedis in a company, maybe Cowbank, and the next month you see that the 1,000 cedis has now dwindled to 950 cedis, you need to keep in mind the long-term goal. If you can't stand seeing your money going up and down, some people would say they don't have the heart for that. If you can't do that, I think you should stay away. So that's a key thing. Ideally, is for younger people, people who have a lot more time on their hands for that particular amount of money, maybe investing in for at least 5 years. And if you also want to invest to follow your interest, maybe you like a particular product and the company is listed, so you want to um, participate in it, or you want to support a certain type of business, maybe it's a local business or something, then you can go in there. So these are some of the things you should know before you determine whether it's a good idea for you. Then you can go to these brokerage houses and they would invest. They would take your funds and buy the investments on your behalf. Then that is a direct way of investing. There's another way, that's an indirect way. There are mutual funds. So you may say, yes, you want to buy stocks, but the question is, which stocks do you want to buy? Which stocks are good for you? Yes, your broker could advise you, give you some information as to which one to buy. However, you may not want to have to monitor the companies, check on your dividends, do there's a whole lot of work. Why not give it to a professional? So there are mutual funds and unit trusts that can do these kind of investments. I would mention, I'll talk about the DataBank EPAC, because I know of it being one of those mutual funds that can invest for a match that has a lot of equity investments in there. So you get a lot more exposure to the equities that you would, as opposed to you buying it directly and having to monitor it. So those are two ways that you can get in, directly and indirectly.
Thank you, Elikim, for that explanation. I think it's very insightful. I like the fact that you explain how people can alternatively invest in stocks by taking advantage of mutual funds, which I believe is very important. So, before you decide to even invest in any before you decide to invest in any kind of stock, you should really understand your risk appetite. Yeah, and one of the things you should also take note of is stocks are for people that want to go long term. So if you're the type that you don't want to invest your money for the next 5 years or 6 years, you want to keep touching your money maybe every year, then the stock market is not for you. The stock market is for those that want to put their money down and then wait for as long as 5 years minimum before they touch that money. So the stock market is for the long-term investor, and then also the stock market is, you can alternatively invest in the stock market by investing in mutual funds, which is very, very insightful, because you may not have the capacity to understand the insights that you need, as well as even following up on the performance of the stock and all of that. So going the mutual fund way helps you because you have a professional that is managing your money for you. Thank you, Elikem, for that explanation. So Elikem, before you sign off, I mean, before we go to the next person, can you just speak about the money market too? You mentioned money market, the treasury bills, and then the other short-term investment. How can one invest in the money market? You mentioned that if you want to invest in the stock market, you need to get to a broker. You need to invest through a brokerage firm. So for someone that wants to go short-term, that wants to invest within 1 year, how can the person go about it? How can you invest in the money market?
Great. So the money market, I think it's even relatively easier to invest on the in the money markets because your first point of call is your bank. They're already holding on to your money, so you could ask them, "Hey, I want to do an investment. What options do you have for me?" They could start. The first option for you would be the treasury bill, and you can buy treasury bills through most, if not all, banks. So that's the first place you can start at. The next place is also a brokerage houses, the ones I mentioned earlier. They also invest on clients' behalf in treasury bills. So that's on the treasury bill side. Your bank can also help you with a fixed deposit. So with now it's not just banks, it's commercial banks. You have the savings and loans companies, the finance houses. So we are looking at Bayport, let's say, Israel loans. There are, I think there's Dalex. There are many other financial institutions. So they can offer you some of these fixed deposits, term deposits. Then I through these institutions, they also have um, unique ways, and so some even offer buying treasury bills through mobile money and their mobile apps. So I know EcoBank and Standard Chartered Bank through their apps and short codes allow these things. So these are some innovative ways that if you get something small, you can put in there. Um, Also, with the money market, I may have mentioned earlier the mutual funds on the money market side. So there you could also go through your certain fund managers like Data Bank Asset Management. There are many other fund managers you could also consider, and a lot of these there's Stanbic Investment Management Services. There's EDC, that's EcoBank's fund management wing, and they have unique ways that you could deposit into your account or start investments and consistently top up. So there you could call on any of these institutions. So that's also on the indirect way you can go. And like with the stock markets, I would just like to touch on who this is good for. With the money markets, it's spread across everyone. Almost anyone is easily a candidate for the money markets because it carries a lot less risk. And but then you just have to understand that with less risk comes less return. You may have heard the saying, the higher the risk, the higher the return. I would say the higher the risk, the higher the expected return. So if you're not going to take on so much risk by going through the money markets, then you should expect that you wouldn't be getting so much return on it. I believe the 91-day treasury bill is about 12 to 13%. A 1 year treasury bill is about, that's a 365-day treasury bill. It's around 16%. Whereas the longer term bonds and the shares could have the potential to give you much higher returns. So you just need to be mindful of these kind of features of the money market. You could use these money market investments for your emergency fund. So instead of keeping your money in a savings account, you can keep it in the mutual funds or a fixed deposit that will earn you a little extra. So those are some benefits of the money market and how to go about it.
Okay. All right. Thank you, Malikim, and that's also very insightful. The money market is for the person that doesn't want to go long term, or the person that is very risk averse. So rather than having a savings account, maybe you should get your money invested in the money market, because that one gives you a better return than the savings account. But then again, the money market is a market that doesn't give you so much returns because it's a very low risk market. So if you want to invest in the money market, you should understand that you're not going to get a lot of returns. But then again, it's better than a savings account. And your bank is actually one of the places you could get, you can speak to if you want to invest in the money market. Interesting, interesting. So I think we are learning a lot, and we can use this information for our financial decisions. So let's go to Prince. Um, Olekem has explained to us how we invest in the stock market, and then the money market. So Prince, how can someone on the call invest in the bond market? Yeah, and what are the returns like if someone is on this call today? The person wants to invest in bonds. How can the person invest in bonds?
All right. So just like with the money market, with bonds, you can buy either through a licensed brokerage firm, and you note my emphasis on licensed because in recent years, we've seen so many things happen in the financial sector. So you want to be sure that whichever financial institution you are dealing with is properly licensed by the regulator, which is the Securities and Exchange Commission. So you can work with a licensed brokerage firm or with any commercial bank that's licensed by the Bank of Ghana. Any of these institutions should be able to buy bonds for you, especially when it comes to the treasury bonds or the government of Ghana bonds. You can also buy some corporate bonds through the brokerage firms. So you just have to talk to your relationship manager in the case of your bank, or with your broker in the case of the brokerage firm, to advise on which of them you should go with. Let them understand what you seek to achieve, because as I mentioned earlier on, there's a wide range of bonds from the 2 year notes all the way to the 20 year and beyond. So you want to be sure that if you want to have access to your funds within 3 years, you make sure you are buying probably a 3 year bond. Even if you are buying a bond that is longer than 3 years, so you are buying a 10 year bond, but you need your funds in 3 years, you need to be able to communicate with your broker so that within 3 years time they can sell off for you to get access to your funds. That is a strategic way of going about it. Also, when it comes to buying your bonds, right, there are two things to note. So there is a primary market and there's a secondary market. And this is something I always like to look at. If bonds were bred, right, the one who is buying directly from the bakery is buying from the primary market. Because in the primary market, you are buying at the time when the bond is just being issued, right? So you are buying it hot. If you are buying the government of Ghana bonds, you are buying straight from the government of Ghana on the day the bond is being issued, and you can do that through your brokerage firm or through your bank. Then there's the secondary market where you are buying from someone else who bought the bond early on. So you could either be buying from your bank that bought some of the bonds and put on their own books so they can sell to their clients, or you can buy from other investors. But even with that, you would still have to go through a bank or your brokerage firm to do that. If you are buying the bond on the primary market, you are getting it at the yield or at the rate at which the government issued. In Ghana, for instance, most bonds are issued at par. It means you are getting 100% whatever you put in there. So if you are investing 100,000 Ghana cedis, you are going to be earning coupon or earning interest on 100,000 cedis. But then you are buying from the secondary market. Now, someone else has been holding the bond for a while, right? So if you are going to buy from the person will need to be compensated for the period for which he has held the bond, which is something we call accrued interest. He has held the bond for a certain period. So while in buying the bond, you compensate the person for whatever period he has held the bond. Some of them will also seek to take what we call a spread on the bond. So they might sell it to you at a lower rate compared to the rate at which they bought the bond so that they can make some return over there. And these are things you need to discuss with your broker so you have a fair idea of how to go about it. Now, a little tip that people can take note of if you want to be able to get the bond real hot on the primary market. There's something we call the issuance calendar. This issuance calendar is more or less an indication of which bonds, say an issuer like the government of Ghana will be issuing and at what times these bonds will be issued, right? And it's available on the Bank of Ghana website, or you can get that from any brokerage firm that works for you. You can always get that. So you have foreknowledge of the expected issuances. So you align your cash flow to be able to take advantage of these opportunities. And of course, always talk to your broker or your relationship manager so they can give you more guidance on these.
All right, interesting. Thank you, Prince, for that insight as well. I think that the clarity, we now have clarity with the bond markets, yeah, and then we understand that you can actually invest in the bond market. It's not something that is so complex, and it's something that anybody can invest in. You just have to get a licensed broker that can invest for you, or you can speak to your bank as well. Before we move to the next set of questions for our panelists, there's been a question that has been asked by one of the participants. So this question has been directed to Elikim. I'd want us to just briefly touch on it before we go ahead so that we don't forget. So Elikim, someone is asking, you made a point that the stock market is for those who want to invest long term. Do you only have to invest in this market while you sit and wait for your returns? Yeah, Elikim. So this question is for you. You're saying that the stock market is for long term, medium to long term, yeah, in terms of risk, and then you have to go long. And then the question is, do you have to sit and wait for your returns as an investor? What's your take on it? I really think that Elikim's explanation does answer the question, but let's hear from Elikim as he just quickly touches on this, and then we can go ahead.
Sure, Edward. Let me take it from another angle. So you could anyone could invest. Anyone who you could even want your money back in 2 days or 3 days and say that you would invest in the stock markets, even just a week. You put your money in today being Wednesday, you put your money in today and you want your money back on Monday. It's fine. You could do that. But the question then is, would you be in the best position if you do that? Are you going to be taking good advantage of this kind of investments? Ideally, I would say no, because there are so many factors at play that could cause you to lose your money within this short time frame. Not just lose your money, you may also have a situation where you may lose maybe 5%. And then there are also trade charges. You buy and sell, there are charges, there are taxes you pay on it, you pay a broker. So you need to give yourself enough time to recover. You don't necessarily have to stay for 5 years. You can look at, if I get in today and the stock price goes up 100% in 1 week, and I want to cash out, I can cash out. But what we've observed is you can't time the market, So now it's more of investment advice, and you can't really time the market. There are some people who are able to do that, and they are very skilled at doing that. However, the average person may struggle to do this. So it's advised that instead of trying to time the market, spend time in the market. And with that, you are likely to reap the benefits. You don't want to take your school fees that you have to pay in 1 month to go and put in the stock market expecting that it will double in a week. Chances are that is unlikely to happen. So that's the way to answer it. Would it be the best situation for you? Probably not.
Okay, all right. Thank you, Elikim, for that explanation. I am hoping that the question has been answered, and so the person that asked the question has the insights that he wants. So now let's hear from Eben. So Eben, how can someone invest in cryptocurrency? I mean, people have been talking about cryptocurrency and Bitcoin and all of that. So I know a number of friends personally who trade in cryptocurrency. So how can someone invest in cryptocurrency? Someone that is probably on the call today and then wants to invest some money that they have. What would you say is the process like for someone?
Okay. Before I go to that, I want to briefly touch on how cryptocurrencies appreciate or depreciate in value. What's the mechanism it runs on, so that at least people have a fair idea before deciding to whether or not to buy or invest in it. So as I stated earlier, cryptocurrencies usually have a fixed supply. So they run on what we call demand and supply basis. So when people are demanding more of a fixed asset, the price tends to appreciate. And when people are selling off that fixed asset, it tends to depreciate in price. So that's the basic model or basic principle that cryptocurrencies work on. Now, if you want to buy cryptocurrencies or you want to invest in it, first of all, question is, there are a lot of cryptocurrencies. Which one are you going to buy and why are you buying it? So we have the Pioneer, which is a Bitcoin, which is usually seen as a store of value for the long term, because again, the supply is fixed. So they call it digital gold, because just like gold is unique, or gold is a commodity because it's difficult to mine gold physically, and you can approximate the number of gold that can be mined in a year across the world, because there's data for that and all that. So because of that, people see, if you can compute the number of gold that will be mined annually, you can say, okay, if there's this supply then and there's this demand for this supply, we can easily approximate and see how the value is going to appreciate or depreciate over some time. In crypto or in Bitcoin, is the same principle that works. We know the fixed supply of Bitcoin, and we know the mining, how mining is being done, and how many Bitcoins are added to that supply going forward. So people can actually extrapolate and see how you can make an executive or academic guess as to the price of Bitcoin at a certain point in time. So you can say, okay, let me buy it now, knowing that at certain demands, at certain points, the price can shoot up to X amount. So let me buy it as a store of value for the long term. Personally, I advise people to invest in crypto for the long term because it's very volatile in the short term, because of, again, it's being controlled by the retail market, which retail market people sell and buy on market news and a lot of sentimental data, which might not be maybe something as in the recent times, Elon Musk tweeting that, hey, today Tesla should accept Bitcoin. The next day he changes his mind and said, we are not accepting Bitcoin. Then the price of Bitcoin moves to those news in the short term. So in the short term, it's very volatile. But over the lifespan of Bitcoin, we've seen it to be the best. Since inception of Bitcoin, it has been the best asset class in the world as of now in terms of appreciation and price. So if you're looking at it for the long term, yes, it's a good asset. But if you are looking at it as a short-term investment asset, then I'll advise you put your money in it. So just like you look at this, it works similar to how the stock market works, that some people will say they are traders who look at it and can buy and sell within a day. Some will say they will buy what you call swing trade, buy and sell within a week. But generally, as a retailer or someone who is not an investor or a trader, look at it from the long term. So it might be to, personally, that's what I do as well, is a portion of your income on a monthly basis, deciding to put in crypto as an asset class. So maybe you might have your savings, you might have your mutual funds, you have your stocks, and adding crypto as another investment class to it, that you put some portion of your income there that you're comfortable with, doing away for the long term and seeing how it goes. So in terms of how to buy and how to buy, that's where my company comes in. That's the Yellow Card. We help people buy and sell their cryptocurrencies or their Bitcoins in the normal. So you can just buy by depositing. So we deposit mobile money and use the mobile money to buy on the platform. So we have an app out there, which just go on Play Store or on your iOS store and look for Yellow Card. You should be able to see the app on there. It's pretty easy. Within 5 minutes, you can get your Bitcoins. Yeah. Thank you.
All right, thank you, Eben, for that explanation. I actually found this very interesting and quite surprising, especially when you said that the cryptocurrency or Bitcoin is quite similar to stocks in terms of, if you want to invest in the cryptos or you want to invest in stocks, it's more of like a long term. So a lot of people possibly don't realize that. And then I think that if you have that mindset that if you are going to invest in cryptocurrency or you're investing in Bitcoin or Ethereum or any of these cryptocurrencies, you should be willing to go long term. That is, you should be willing to invest the money and then wait for the money to appreciate in value. And like you said, in recent times, the the value of cryptocurrencies has really increased tremendously and is becoming one of the very popular asset classes. And right now, as I speak to you, I know that a number of hedge funds and then other investment firms are investing heavily in the market. So the crypto market is a good market to invest in if you also want to go long term. So it's kind of like an alternative to the stock market in a certain sense because now some investment firms like Goldman Sachs, JP Morgan, and then some other hedge funds are investing heavily in cryptocurrency. Thank you, Eben, once again for that explanation. So finally, we'll hear from Frederick about the forex market. So, Frederick, how can I invest in forex? Yeah, and let's say that maybe I want to take time and then learn the scale of trading. Would you recommend that, or you would rather recommend that I put the money in an investor's hand, or I mean, like an investment firm's hand to do that for me? So, just like how if you want to invest in stocks, you get a broker to do it. Is this similar for the forex market? So, can you share with us how someone can invest in forex?
Okay. Sure. Please, can everyone hear me?
Yes, we can. We can hear. We can all hear you.
Hello?
Yes, we can hear you. We can hear you,
Great.
Frederick.
So I just like the way all the speakers have talked about, everyone going long term. The reason why I said in my introduction that you can win in the forex market is because you have to think long term. You have to think as a business. Like the way we have down times and up times with any business. That is how trading forex is like. A lot of people don't have money to really invest. That is what I know. So they get a few thousand cities and they want to push it in the market and think that they can make a ton of money from that thousand cities. Um, it doesn't really happen that way. So for me, I want to advise everyone that
I think we are losing Frederick. His internet is messing up a bit, but he should be able to join us soon. So while we wait for him to join, once again, you can join the conversation on our social media pages. I mean, follow us as well, and then see basically all that we are trying to do with African observation. So the link is has been shared a couple of times on the chat. You can as well get it again, and then all you have to do is to just visit our accounts on social media to really follow us and then get to know all that we are doing. Also, you can get the African Observations app, which gives you financial information across markets, investments, and then advice, basically to help you make better and informed financial decisions. So the link is going to be shared on the chat once again. You can simply tap on it, get the app, or you can basically follow our social media channels to see all that we are doing. Thank you for joining so far. It's been a pleasure hosting you. Just waiting for Frederick to get his internet back and then we can have him. But while we wait for him to join, I have a few questions that I would ask our panelists, and then hopefully we should have Frederick back. So, Prince, Dagadu, this question goes to you. So, would you recommend the bond market for someone who wants to invest over the stock market? Like in this, let's say in this era that we find ourselves in this period that we find ourselves in, would you recommend the stock market? I mean, would you recommend the bond market over the stock market? Yeah.
All right. I think there's no straightforward answer to that because no two investors are the same, right? Um, you have two different investors with different situations. For instance, if we are looking at two average income people, where one is a young person and the other is elderly, they might fall within the same income bracket. But if you consider the fact that equities are long-term investments, while with the bonds we have shorter term options like the 2 year and the 3 year notes. I wouldn't recommend for the elderly person, someone who's way into their retirement, to be investing into stocks at that time because if the stock market crashes, this is somebody who is probably not earning any other income. They are not actively working. That wouldn't be a good idea for the person, right? Compared to the young person who can still invest in stocks, make some good money out of stocks in the long term. But even if the market is down because he is actively working or actively in the workforce, he has alternative sources of income. So there isn't a straightforward answer to that. We as investment advisors would usually look at the situation of that person. We would want to look at their sources of income. We would want to look at the other investments they have, what their risk appetites are. Elikem touched on that before we can make a decision. So I'm not just going to push people towards the bond market because I'm a fixed income trader. That would be unethical on my part. It's rather proper we understand what the person's investment objectives are, what the person's financial situation is, and even if you can even get to the point of looking at things like their age and even health, because your ability to earn income would let us know what portfolio mix is advisable. And it's really not a binary situation. It's not a case of black versus white. The beauty of portfolios is that you can have a little bit of this and a little bit of that. Eben talked about the fact that you can have your savings account, you can have your mutual funds, have something in stocks, have something in crypto, and also be trading some forex on the side. So at the end of the day, all the panelists get someone to take care of, right? So it isn't a black and white situation. We
All
look at
right.
the situation of the investor in question and then we address them accordingly. I think Elikem would want to add on to that.
Yeah. Okay. All right. Great. Thank you, Prince. Before I allow Elikim to speak, I just want to mention that you can get the app African Observations on the Play Store, Google Play Store, and then the App Store if you use iOS, and then you get all your information that helps you to make better informed financial decisions. The link has been shared on the page. You can also follow our social media channels to get to know everything that we are doing. The video for the webinar will be available on YouTube, so you can always go back to watch it to get the insights. So let's hear from Elikem, and then we go back to Frederick. Yeah.
Okay. So Prince's answer to the question was spot on. I just want to add that I understand that I understand for some people that when you ask such a question, you would want a simple answer, yes or no, and then you go ahead and put your money where you want to put it. But I would encourage you to just be patient, and when you hear a professional trying to explain it, take your time. I'll just share one example where there was someone, a taxi driver that some colleagues of mine took some time back, and they said that they lost some money because when they contacted us for investments, we were being book long. Let me put it that way. We were explaining a lot, and the person was just in a hurry to invest. Let's take caution. And Prince mentioned something key. It will be unethical to just make one decision. We need to understand before we advise. So take your time because money affects almost every aspect of your life. So you don't want to make a rash decision. You want to make a well-informed decision that will suit your interest. So please take your time to understand these decisions before you take them. Thank you.
All right. Thank you, Elikem, for that explanation. We have Frederick back on the call, so we would hear from Frederick, and then a few questions have come in. So once Frederick is done speaking about the forex, then we can answer those questions, and then we can call it a day. So Frederick, over to you. Thank you.
Sure. Thank you, Ed. I was making a submission on people having patience when they want to invest, and I was saying that a lot of people have not reached the status of investing, and the reason is because they think they get a few thousand, 10,000s, and they want to put it in the market, and they want to get very rich with 10,000. It doesn't really happen that way. If you want to get very rich with 10,000, it means that you are going to use a lot of leverage in the market. And if you're using a lot of leverage in the market, that is what makes investing risky, especially for Forex, crypto, and the other trading, what do you call it? Uh, 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 um, Trading investment out there. And so before you think of going into investing, make sure that you have a good level of what do you call it? Uh, 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 it's either you're going to do it in a very long term, so you find a product that has compounding interest, okay, so that you can make incremental deposits, so that by the time you are reaching age 60, over the period you'll be hitting a very good sum of money. But if you want to like really invest right now and get money right now, you need big money to be able to do that. So I will advise anybody here or listening to us that if you are looking to investing, think long term, and then think of it as a business. You lose some, you gain some. Forex is such that it is a 50-50 game. Okay, you can lose and then you can win. And so if you are played as a business, if you are playing it as a business, what it means is that you are not over leveraging, but you can even lose 50% of the time and still make a lot of money. Okay, but it needs patience and it needs time, and that is what a lot of people don't understand, and so they rush into the market, place trades, leverage a lot, and then with just one tick, they lose all their investment, all their money. And so that is it for Forex for you. If you want to invest in Forex, there are several brokerages around. I don't know if I can trust any Ghanaian broker, because I quite remember when I started my journey, I was working with Ghanaian brokers. All of them were out in a matter of year or two, and then my money gets stuck. And so from there, I made a decision not to use any broker here in Ghana, but I'll use a heavily regulated broker elsewhere that I trust. And fortunately for me, I got a mentor who recommended a broker for me, and then that is the broker I've been using since that incident happened with the brokerage firm I was using here in Ghana. The only issue is that transaction cost, of course, is high when you are using such brokers. But I think right now we have other brokers like Exness and FXTM who accept mobile money and stuff, just to reduce your cost of opening an account with them to start trading. The good thing about Forex is that your destiny is in your hands. The destiny is in your own hands. You can, if you are winning, you are the person winning. If you are losing, you are the person losing. And so if you want to be in the Forex game, I will advise you start with a demo first. I am available. I have a very, very, very simple trading strategy. I've taught a lot of people, but they still don't get it because it's too simple for them to really follow. And let me give an example. Since I began to make profit in the market, I've only traded only two what do you call it? Two pairs.
Currencies.
I've traded only the German DAX and then the S&P 500. Why is it that? Because that market always goes up. Okay, it always goes up from the 80s, from the 18s to the 20s.
I think Frederick's internet is being a challenge again. So we'll quickly take the questions and then we come back if we still have him. So the question here is to Aben. Someone is asking, um, Aben, you spoke about the yellow card. So the person
Hello?
is asking. Okay, Eben is Frederick is back. Yeah. Okay. So let's hear from Frederick, and then I
Yes.
quickly go
So
back to the question.
yeah. So I was saying that look, if you want to get into the Forex game, I mean, there are so many strategies you can use.
Um, okay, Frederick's line keeps breaking. So um, let me just ask the question that has been put out to Eben. Eben, what's the amount you should deposit to purchase one Bitcoin? Yeah, someone is asking what's the amount one should deposit to purchase one Bitcoin. So Eben, if you can help us with that.
Okay. So you want to purchase one Bitcoin. So I think it depends on the day you are purchasing it and the current price of one Bitcoin. So I think the current price is around $31,800 per Bitcoin. So in this case, if you want to purchase one, you have to deposit. So our rates currently is around 6 cedis per dollar worth of Bitcoin. So you have to multiply the 31,800 by that 6 cedis to get the CD value of that.
Okay, interesting. So that is a very huge sum of money, a very huge sum of money. But I guess your question has been answered. The person I was asking about
Also, let me clarify that you don't have
Bitcoin.
to
Yeah.
purchase one Bitcoin to say you have one Bitcoin, or you can, if you look at, you can buy as low as 20 CDs. Can start with as low as 20 CDs to buy Bitcoins with it.
Okay, all right, sure. So that's a very good clarification. With as low as 20 cities, you can actually buy Bitcoin on Yellow Card. Thank you for that clarification. Now let's go back to Frederick, who is back on the call. So after Frederick, we pick
Yeah,
up
I would like to
the
really
last person.
apologize to everyone because my network has been unstable. But I mean, the point I was making is that if you want to go into trading or investing in forex, I would encourage you, but just note that it is not something. It will not make you. It's not a get rich quick scheme. Okay, I mean it can make you good money, but it's not get rich quick. And if you want to learn, I am available. I can show you a very simple trading strategy that I used to trade the German DAX and then the S&P 500, because on yearly basis this market have been making 10% gains. So like you can put in your money and you know that by the end of the year you're going to make 10%. So I mean it's like for sure. All right. And so if you want to double that or triple that 10%, then I have a way that I can teach you. Currently I have some of my guys who have made up to 2000%. I mean, you will not believe it, just with that particular strategy. And so I encourage you, if you're interested. But what I want you to know is that you have to be patient in the market. You really, really have to be patient in the market. Look, the market only trends 10% of the time. 90% of the time it is choppy. Okay, so it means that 10% of the time you don't have to trade in the whole year. I mean, sorry, 90% of the time you don't have to trade in the whole year. All right. So if you think every time you can jump into the market and come back, jump into the market, that is where you lose a lot of money. And if you are spending a lot of money also in a short time, you also over leverage. And as you over leveraging, you are really going to destroy your account, with just one movement. So please be patient in the market, think long term, and then trade as a business. I mean, don't be in a rush. If you rush, you always crash. Warren Buffett said that, look, the market is a vehicle that is used to extract money from the impatient to the patient investor. If you're not patient in the market, you will always lose. If you want to accumulate wealth, you need time. And if you don't have a lot of money to trade in this high risk assets, get to these banks, get a mutual fund that has a compounding interest. Deposit it will accumulate, and it will, I mean, by 30 years time you marvel how much you would have in your account. Okay. And so that is just what I want to use to sign out.
Interesting. All right. Thank you so much, Frederick, for the insights shared. I think for me, one of the key things that I would want to say is that if you want to invest, you should always think long term. I think a lot of people get that wrong because they feel like investment is a game or it's like a game, like you gamble and then you put some money and you get some money, like a magic scheme. But if you really want to invest and then make a good return, as well as like build sustainable wealth, then the long term is the way to go. And it's amazing that all of the speakers have mentioned how important it is to be patient and then also to think of the long term. So whether it's the forex, is the stocks, the Bitcoin or cryptocurrency, always go long term. People go and invest in cryptocurrency or Bitcoin and then all the other ones, thinking that, oh, I can just make quick money. But if you are going to invest in cryptocurrency thinking it's about quick money, you've already damaged yourself, or you're already going to run at a loss. So even with cryptocurrency, go long term. Same with forex. People think that, oh, you want to invest in forex, you just put the money there. After a day, you get your money back. Blah blah blah. It doesn't work like that. You should always go long term and even understand your risk appetite to know the kind of market that you want to invest in. Thank you so much, Frederick. So I would want to just read out the final questions we have here. Um, so someone is asking if the trading strategy that you mentioned can be shared. So like I mentioned, the African Observations app is a platform where you get better informed financial decisions. So on the app, we have an advice or an expert section where you can actually engage Frederick. So Frederick is going to be on the app where you can engage him on this trading strategy. So someone is asking for the strategy on the app. You can get this trading strategy once it's released, once the feature is released. So we'll keep you posted on that as well. And then the contact of the speakers, we would also arrange for that. So thank you so much for all the questions that have come in. One last question that was asked: will you advise someone to invest in stocks in this era of COVID? So I think, Elikem, this question goes to you. Someone is asking, will you advise um, to invest in stocks in this era of COVID? So I think this will be the last question for today, and we can call it a day. Yeah.
Yeah, I think that's an interesting question. And a key caveat in the question is in this era of COVID, there are winners and losers in this market. There are the technology companies that are winning, and we have some companies that are losing because maybe demand is going down for them. But when you pay attention to the companies on our Ghanaian stock exchange, you'd realize that not too many have been hit. There are some companies, take Fan Milk for example, that was most of their sales came from people buying in the streets, and now people are hesitant to exchange money and talk to strangers and buy stuff. So there's that. However, you also need to remember that in as much as we wish people would have been doing the social distancing for the last year, fact is not a lot of people have been practicing that, and things business returned to normal pretty soon. So markets were not devastated as much as other markets. So it's a win. Some win, some lose. You need to really think about which specific company, but there's no sweeping answer that would say that all stocks are bad because of COVID. Even in the developed markets, there are certain stocks. Zoom went up because it was time for people to use Zoom, and I'm sure a lot of us are using Zoom, and we may have not have used Zoom in 2019. So these are some of the factors to consider. Each specific stock is different. Yeah, thank you.
All right. Thank you so much, Elikem, for that explanation. We've spent a good time here, and then I just want to say thank you to all the people that have joined in to listen to us as we delve into the financial markets. And I believe that we've all picked up insights for our financial and investment decisions. Thank you for joining in, and a big thank you to our panelists also for sharing with us great insights that will help us in our financial journey. So once again, all of this is brought to you by African Observations. You can follow us on social media on Twitter, Facebook, YouTube, LinkedIn, and then Instagram. And then you can also get the African Observations app, which is available on the Google Play Store as well as the Apple Store or the App Store. And you can make better and informed financial decisions with the information that we give you. So thank you once again. It's been a pleasure hosting you. Do have a good night and get the app to get in touch with all the advisors or the experts that have been on the show today. My name is Edward. Thank you and good night.